So Bitcoin doesn't interest you because of its electronic nature. It can be shut off in a crisis with no electricity.
In my opinion, it's like paper money. It's built on belief. I'm a non-believer. I believe precious metals have a proven track record of having some value. You and I, we travel to the jungle and we come to a tribe in the jungle and they look at this, they laugh about it. And they say, who on earth is so stupid to buy something like this? But you and I travel with 3 gold coins into the jungle. They bite it and say, oh, very good.
Yeah, we'll give you some food. You can stay with us for a few nights.
You can stay with our women.
Today I have the honor of welcoming the legendary Marc Faber, editor and publisher of the Gloom, Boom, and Doom report, onto the pod. Marc, this is an honor for me. I've been listening and watching you for about 20 years. For those who don't know or may have forgotten, Marc is widely credited for predicting the 1987 stock market crash. You saved your clients a fortune then. You anticipated the dot-com bubble bursting, and you warned even, before 2008 of the mounting excessive debt and loose monetary policy. Now, through it all, when I think about emerging growth, I think about how early you were to recognize China's growth long before it became a mainstream investment theme. So here we are, it's December of 2024. The NASDAQ, the S&P, they're hitting new all-time highs almost every day. It's all boom, no gloom. When you look at the current landscape, what do you see? Is this just another bubble that's going to pop? And be reflated a few years later to new all-time highs? What do you see?
Well, I have to say that the world has been enlarged. Let's say when I started to work in 1970, people invested in America and in some European markets, but the focus was really the United States, and very few people looked outside of the US and Europe in terms of investments. And nowadays, because of mostly the breakdown of the socialist communist ideology in China and also in India and Russia, Eastern Europe, we have a world that has expanded dramatically economically, and the standards of living of, say, 3-4 billion people around the world have been lifted because of the abandonment of the communist ideology and the acceptance of free market principles and of the capitalistic system. I mean, I'm saying this because the socialists are always attacking the capitalistic system and say it's an unfair system, that they're rich and poor and so forth. But I can tell you, I went for the first time to Eastern Europe in the 50s, in, say, 1954, to Yugoslavia, specifically Croatia, Dubrovnik. It was an impoverished place, but we were not very rich because my parents were divorced and my mother didn't have a lot of money. So we went to places that were reasonably priced.
But still beautiful.
It was a very nice place, And then when I was in the Swiss ski team, we went often to Eastern Europe for races. And we raced with Eastern European people and saw how badly equipped they were and how poor everything was. Yeah. And so I'm very familiar with seeing the socialist countries and the communist countries. I also went in 1968 to Prague, the day before the Russian invaded, because there was the Prague Spring.
What year was that, Marc?
1968.
Wow.
I think it was August 21 or something like this.
So you were on one of the last trains out before the Russians rolled in?
No, I arrived, and then then I went, of course, immediately to a nightclub. And when I walked out of the nightclub, I had my car parked there, and I saw a lot of airplanes in the sky, and people were running around the streets. I asked someone, what is happening? And he said, the Russians are coming. So I thought the action must be near the airport. So I drove to the airport, and halfway to the airport, I saw the first tank moving towards me with my car. So I turned around and went back into the city. And I had rented a room at the time in a pension next to the media building, the broadcasting building. This is the first building the Russians immediately took. So they controlled the radio and the TV. And so they parked their tanks around my VW car. The next morning, I had to go and knock on the window of the tanks and ask him to move so I could drive out.
How did you get home?
I wanted to see, because I was interested in the experience, and in those days, I wasn't worried at all.
Right.
I wanted to see how
it
works. So I stayed on, and in the pension that I was at, there was a couple from America. They were Jewish, and they had gone back to Prague because I presume they still had some relatives. They had fled during the Second World War or later, I don't know. Anyway, they were in a panic state. So I said to them, look, don't worry. I will drive you to the American embassy on the other side of the river. So I put them in my car and we drove off. And then, of course, at the bridge, the Russians, they stopped every car. There were not many cars anyway. They also stopped me, but I showed them my Swiss passport. I said, I'm an ambassador of Switzerland. I want to go to the American embassy. And then he let me through.
Well, there probably weren't many young Swiss guys hanging around Prague at that time.
No.
That's incredible, Mark.
I had met a girl in a nightclub, and she said, look, let's go to my parents' house. I mean, I didn't have much money then either. Yeah. So I said, okay. Then we drove out, and it was not so easy to get out of the city because there were checkpoints everywhere. But a truck driver ahead of a checkpoint, he took a side street into a field. And I said to myself, the best is I followed this guy. And I followed him, and we reached the Russian checkpoint in the countryside. And this truck driver, he got out of the truck and gave hell to this checkpoint till they let him through. And I drove behind them. So I got to the house of this lady. In my life, and still today, I sometimes, I don't have nightmares, but I think about this extreme poverty. I never seen anything of that sort. And that's why I tell young people, go and see how depressed and the economies are of socialist countries. There's nothing functions.
Yeah.
And that's why I always say, when people tell me, oh, the government should do this and the government should do that, I tell them the government should do nothing at all. And hopefully Mr. Trump will play golf the whole day and not touch anything.
I think he's going to do a little more than that. But yeah, to your point, I mean, that's why Cuban Americans and all these people who've moved to America from countries like that don't want anything to do with socialism or communism or anything like that, because they've seen it. They've lived it. They don't want it.
They've seen it. And it's a complete disaster. And I can tell you, I mean, I'm not saying everybody in China is rich, but I can say in good conscience, everybody in China is much better off today than at the time of Mao Zedong. Some, of course, horses have moved ahead other during the race to wealth and so forth. But that is the shortcoming of capitalism, or the incentive that capitalism offers. People work harder when there is an incentive. And so some people, they work very hard and they move ahead and they're lucky. They can have a lucky day. And so in sports, you always have good days and bad days. But in general, people prefer to do a job or to live in freedom than in oppression. And the socialist ideology and the communist ideology is an ideology of oppression and of jealousy, envy. They envy the rich people. Go to any socialist country, they destroy capital accumulation in order to distribute it to poor people. But the poor people, they don't know what to do with it. And most of the money gets not distributed, but hangs in the pockets of the government officials. This is the reality. And I've seen it, and I'm telling all the young people, whatever the government touches is worse than before they touched it.
Yeah,
the regulation has had the impact to stifle economic growth and to increase prices more than they would have increased had regulation been less stringent.
Now, when you look at China today in 2024, they've had some problems. They're putting out stimulus. They've got their own corporate debt crisis and everything else going on over there. How do you see that economy coming out in the next few years? Is it going to continue to bounce along the bottom, go lower? I mean, they've had a huge property collapse.
This is one sector of the economy that has obviously a major problem. But in general, the economy is not as bad as the Western media portrays it to be. And whereas the response of Western governments to a crisis is always to print money and to increase government spending, the Chinese have actually been very kind of moderate in their stimulus. That
so far, you're right.
Endorse that. I support. The Western economies, mostly the Keynesian, they only have one thing in mind: stimulus, packages, fiscal deficits. Long-term fiscal deficits are a disaster and lead to hardship and inflation. So the fact that they haven't done that much is actually, for me, encouraging. And then I want to introduce here a thought. Markets move to different rhythm. So you can have, say, a market that is depressed, say wheat, corn, soybean, and a market that is in a euphoric stage, say coffee at the moment, is up 70% this year, or Bitcoins. Anyway, the fact is, at the present time, the money of the world that is being printed to finance deficits that the governments have, the fiscal deficits, most of this liquidity is flowing into the US stock market and dollar assets, mostly into a limited group of stocks, the Magnificent Seven. The whole world is gambling on NVIDIA and NVIDIA options and so forth. By definition, if all the money of the world flows, say, into one sector here, by definition, other sectors are depressed. And so I look at the world like this. The US has the highest valuation ever in terms, relatively speaking, and absolutely thinking. Sentiment by investors believe that stocks will be higher in a year's time is at the highest ever. And individual investors are piling into stocks. Now, think about this carefully. They're piling into stocks, most of which they have no idea what they're buying. They're just buying them because they move. It's same like Bitcoins and so forth. And at the same time, a proven investor, I mean, I'm not a great fan of his, but at least he has demonstrated an impeccable long-term track record. Mr. Warren Buffett is pulling out of markets and increasing his cash position. And his cash position as a percent of assets, it is at the highest level ever.
It's approaching 400 billion.
About it. Who do you believe? The thousands of mob investors that are rushing into some sort of tulip mania, or someone who is a seasoned investor? I would be on the side of the minority. At the same time, I have to tell you, I mean, I look around the world. The US stock stocks are very highly priced, but I look at, say, Asian markets. The economic outlook, forget about China growing at 8% per annum. This is over. It's finished. But can they grow at 4%? Can they become a rich country because its population is declining? So the output is higher on a per capita basis. And in my opinion, through automation, they don't need a large population or population growth. And then I'd just like to introduce another thought. I see Western people, all my friends and their children and so forth. Basically, we Westerners, with few exceptions, we have become a spoiled society. Spoiled. I'm cold, I can't go to the office, and I need free time because of my mental health, and I can't come to the office because it's inconvenient, God knows what. And in Asia, And in other parts of the world, people work. My staff, I tell them, you don't come to work, you don't get any money, period. It's as simple as that.
You said something there that kind of caught me. The US stock market, cleanest shirt in the dirty hamper. And that's been the case, for years now. That's been the case with the US dollar for years. When you look at all these other currencies, the Eurozone, it's a mess. How long can the US dollar stay elevated? It's still above 106. When you look at some of these bull markets and gold and commodities, the US dollar was in a downtrend. It's been very strong, for the last 5, 7, 8 years.
Yes, but, it's been strong against other currencies, but not against an honest currency like gold, silver, and platinum. Okay, platinum is a special case, but gold has appreciated against the dollar essentially since 1971. In 71, we were at $35 an ounce. And now you need $2,650 or so dollars to buy an ounce. We have this downtrend in the purchasing power of money, and people should not kid themselves. The purchasing power of money has gone down much more than the fraudulent Bureau of Labor Statistic compiles. The cost of living of ordinary people has gone up much more than what they show that inflation is. Same in Europe, by the way. Same in Switzerland. In Switzerland, they claim we have no inflation. BS. We have inflation. Everything is so. Everybody who goes to Switzerland says it's very expensive. Yes, it is very expensive. Yeah,
no, I agree. I'm thinking more back to, and you're absolutely right. That long-term trend is undeniable. But, in the 2010, 2011, gold's previous, when it hit that high just above 1900, you saw the US dollar index fall to the low 70s. And, amidst kind of the first big money printing following the great financial crisis, do you see the dollar rolling over in that respect, where it breaks 100, breaks 90, gets back into the 80s? Do you see an environment that could perpetuate that in the coming years? I think that's what will supercharge gold and some of these other assets, right? That yes, they've been grinding higher, but in terms of really breaking out, I think the dollar needs to roll over in a meaningful way. Do you agree?
I'm ultra bearish about the dollar, you understand? But I'm an investor at the same time. So most of my cash is actually in dollars. And I want to explain to you and your viewers a funny fact.
Please.
Some of my portfolios I value in dollars. Some of my portfolios I value in euros, and some in Swiss francs. Now, you would think when the dollar goes down that it is good for my portfolios because it's value in euros. No. Mm-hmm. My portfolios appreciate when the dollar strengthens because I have holdings in dollars. I value different portfolios differently, so I can always sleep happily. If one portfolio is likely to appreciate somewhat.
If one's up, if one's down, the other's up, and vice versa.
But in general, when I look at the price level in the US and the price level elsewhere, the US is grossly overvalued. Grossly.
Yeah.
But you are right. The dollar, if someone said to me, Mark, you have a choice, you can keep all your money in Thai baht. I live in Thailand, in the north, in the Golden Triangle. You must keep all your money either in Thai baht or US dollars. Where?
Easy choice.
Both are undesirable.
Oh, both choices are so bad?
I would say if the choice was, you have to keep it all in dollars, gold, or in Thai baht, I would choose gold.
Of course. Yeah, for sure.
I just had an American here. He has been a few years to jail, but he's a very nice person. Everybody who's in jail is innocent. Anyway, it's a question, whether you keep your assets.
Well, you have to keep them somewhere. So I think, having two or three currencies. I tell you, the
best is to diversify. I think at the present time, as I hinted earlier on, the US level of asset prices is extremely high. And I want to emphasize the high level can be measured at, say, the housing market.
Yeah.
The housing market in America is very interesting, economically speaking, because prices are up in the sky. Now, you would think that in a bull market where prices are high, the volume of transactions is very high. No, it's low. Why? Because the affordability is at the lowest level ever. That tells me that the price level in America is high and in other countries relatively low. And I can see it myself because I travel somewhat.
Especially for the higher end, like real estate in the US. I know my friend is trying to sell his home in San Diego and there's just no action on it. It's very difficult.
Dead.
It's totally dead.
But the central banks have created a huge problem for themselves. Looking at the asset markets, they should tighten. But because monetary inflation impoverishes the majority of people, so because the majority of people is impoverished based on economic fundamentals, they should probably cut interest rates, but not based on the asset value. The asset bubbles are there, real estate, stocks, everything. Someone, an outside observer would say, looking at the financial markets, would say, you're crazy if you cut rates here. On the other hand, if you look at 80% of Americans whose standards of living have been going down, they should cut rates.
I know.
But that's the dilemma. The cut rates, financial markets go even higher and the property market goes even higher. And it diminishes the purchasing power of people. I mean, this whole thing is summarized very well in this book, The Economics of Inflation. I mean, I've shown it before, but it's a reminder. This is, I mean, really the seminal work of economics about inflation. This Bresciano Turoni became a professor, but he was working in the Reichsfinanzministerium in 1918 to 1922 in Germany during the hyperinflation. And he wrote different chapters about stock prices and about currencies and about the social implications and the concentration in industries. This is the Bible about the impact of monetary inflation on everything. A fascinating book.
We'll put a link to it in the description.
Well written, because it's not written by an American economist.
And did he live through the Weimar Republic and the inflation?
Yes.
Yeah. What's fascinating about that is it came on, it was euphoria, right? As assets prices were going up, the market was going up, everyone loved it until they didn't. And it went parabolic, right? The inflation, right at the end, right in 21, it just went crazy, like straight up.
Crazy.
Do you see, on October 1st, you published, you have your market, monthly market commentary and, your contrarian mindset, right? When everyone thinks alike, everyone is likely to be wrong. You talked about that a bit earlier, and you wrote in that piece that an unprecedented monetary destruction is coming.
When Ben Bernanke embarked on QE1 in December 2008, they asked me on TV, what my view was. I said, once you embark on monetary inflation, it's practically impossible to stop it. It can be stopped, but the pain is such that every democratically elected government will prefer to postpone the major pain by printing more.
Yeah.
And in my view, we may have, like in the 70s, waves of inflation and then prices came down again and so forth. But in general, the governments in the Western societies, they're so deep into fiscal deficits. Now, the fiscal deficits you could solve. You can go to the people and say, look, we have to increase taxation. I'd like to see the politician who gets elected when he tells people you have to increase taxation. Second solution is to say we have to cut spending. But as you know, in America, most of the spending cannot be cut. It's mandatory.
Yeah, Medicare, defense.
So what can be cut is very small. That's why I don't believe that this efficiency department will be very successul. And the third solution is to default. They can default, but it's very messy because there's so many foreigners, and the pension funds in Canada among friends and so forth that own treasuries. So you would have to default and say, all of you get paid and all of you don't get paid, but that it would be the end of the dollar as a reserve currency. And then there is the easiest solution, and this is acceptable to most people because most people like the government to implement policies that are inflationary because they don't know that they are inflationary. But once the inflation happens, they don't like the inflation. So the dilemma is, what leads to inflation is well liked in a democracy, but the inflation per se is not liked. And specifically consumer price inflation. People like inflation in properties because property prices go up. They like inflation in stocks because the financial sector gets richer and richer, including Marc Faber. So it's all good.
But they go to the grocery store and they can't afford to eat.
Yes.
They can't afford to go on vacation. They can't afford a hotel.
Yes, that's the way it is.
You know, when I look at the Fed and the US and the debt, this time is different, right? That great book that looked at all the different, banking crises, currency crises over the last, 300 years. That 100% debt to GDP ratio is often the point of no return. The US has blown through that. We're at a 125, 130% debt to GDP. But having said that, the economy is still growing, although, largely due to the inflation. It's still expanding. The Fed has reduced its balance sheet now, right? It's gone below 7 trillion, and it continues to run off. At what point do you think that sort of their powder's dry for another, crisis? And how long can they kick the can down the road? People have been calling for this collapse, right, for some time. It feels almost like a mania sometimes, the markets. You see these different signs, whether it's Bitcoin or what have you. But yeah, can the Fed keep playing this game for another 5 or 10 years, 20 years? Or do you see that the box is getting smaller and smaller and that the wheels are going to fall off before 2026 or 2028? Or do you just not know?
We are in a stage where it will accelerate and it won't last another 100 years. There's not going to be that way. Because once you embark on monetary inflation, once the recession occurs or is perceived as a recession, you said the economy is expanding. Yes, the economy is expanding because the government collects tax and prints money. It sends this money to households to let them afford to go to Walmart and spend money at Walmart. And the shareholders of Walmart are not the poor people, but the capitalists, the rich people. The whole thing is artificial, in my opinion, and it won't last very long. My view is we are at turning points because at this stage, if you print money, you can probably maintain consumption at a certain level, but the price level will go up if you increase the quantity of money. And we are in a stage where if you print money, it is likely that the price level goes up at a faster pace than nominal wages. In other words, real wages, real economic growth is negative. When someone tells me, look, GDP is up 2% per annum.
Yeah.
I say it's up 2% per annum if you use the methodology of the Bureau of Labor Statistics. But the private economist says, someone like John Williams, according to him, at present time, the cost of living is increasing at more than 10% per annum.
That's fair.
I would say not my cost of living, but for sure, it's more than 5% per annum. And there was a lady, she sent me about a letter from her healthcare provider. And I have the letter, I printed it in my report. Her cost of this insurance is going up by more than 90% over 3 years. 90. And the government has the audacity to tell people that healthcare costs are down over the last 3 years. This is a lie, a blatant lie. But the Wall Street economists do not point this out because Wall Street loves money printing. The asset value goes up and the profits go up. It's the industry that supplies the Fed chairman. Wall Street supplies these guys. Wall Street benefits from money printing.
That's why you're seeing, the election of Trump. Anyone who's in power in the West is out because of exactly what you described. The living standards are going down year after year after year, and the cost of living is outpacing any wage gains that they have. But yeah, I mean, the people who are really getting hit, anyone who's, doesn't have an inflation-adjusted pension, these older demographics, Mark, who retired 10, 15, 20 years ago, that don't have inflation-adjusted pensions, they're getting wiped out. And that's why the inflation, it's so tricky. They have to snuff it out. But the problem is, the interest on the debt, right? Like they have to lower the rates to pay the interest. But if they do, inflation's going to come rearing back, and all these people are going to continue to get wiped out.
I tell you, the Fed
what do they do?
Has maneuvered itself. They were not forced to do it. This is by design. They overlooked the fact that when asset prices go up as much as they did in the 1980s, 90s, and now in the last 20 years, that this is some sort of monetary inflation, the origin of it. And then they always encouraged asset price inflation, but they can't control where it goes, and they can't control the consumer price inflation. So they are now in a very difficult position. In my view, they can solve the problem, but it's very painful for at least 5 years. And the other less painful solution is to keep on printing.
How would you solve the problem, Mark? If you were running the Fed?
Well, Milton Friedman, he was very skeptical about central bankers, and he thought the computer could do their job. Artificial intelligence could do the job much better than they do. That is for sure.
You're known for calling, the 87 crash, being early to it. Again, in the late 90s. The period we're in right now feels like 1927 to 29. It feels like the 1990s, where you have the market going up 25, 30% year after year. How early were you back then to the crash? You told your clients to get out, in 87. Did they want to wring your neck for the last 3 months, the last 6 months, or were you a few years early? And so, two-part question: how early were you back then? And then, now do you feel like you're early or late or right? Are you going to be on time? What's the timing look like going forward? Nobody can be right on time when it comes to the markets, even the Swiss.
You can be lucky. I think it was August 21, 1971, a day before the dollar devaluation and the closing of the gold window. I wrote a report. I sent it to all the offices of Whitewell. I was working at the time as a trainee in New York for Whitewell. I said, in a case of a dollar devaluation, you have to own these stocks because they will benefit from it. And it happened a day later. By accident, suddenly at Whitewell, I was the currency expert. As a trainee who's never really studied economics, I was the currency expert.
They moved you into a new office.
And then, the next thing was, one of the big calls I made in the late 70s was that the oil price would collapse. And I used to go to the Middle East and people told me, you're crazy and this and that. Eventually it went down. All the Texas banks went bankrupt. All of them. All.
Wow.
And then in 87, again, by accident, I wrote actually a report on a Friday, and on Monday, the market collapsed.
And what was the synopsis of the report? That this market's overvalued, it's going to implode?
That the crash would be terrific.
You're writing in October.
In the case of Japan, I started to be negative in 87, and the market kept on going up until December 31st, 1989. And then it collapsed.
And it has never recovered.
But it collapsed more than I had predicted. I had many bets outstanding with individuals and friends and so forth that the market would go down 50% or more. And it went down more than 70%. So it wasn't right. But, I just want to say this. My business was built on identifying markets that were very depressed, like emerging markets in Asia in the early 80s were terribly depressed. The Philippine stock market capitalization is a country. Nowadays, I think they're close to 100 million people, but in those days, about 70 million. The whole stock market capitalization was less than 500 million US.
Like $5-6 a person.
In the late 80s, I went to Latin America and I saw Argentina Argentina had been one of the successful economies at the beginning of the 20th century. The market capitalization in Argentina was less than 700 million US. So my reputation as an investor and among emerging market investors was to recognize the undervaluation of some assets in emerging markets.
But and you did that wonderfully. I mean, with China, especially China and India.
Yes, and that my book was Tomorrow's Gold, Asia, Age of Discovery.
Yeah.
But look, everybody has his winnings and his losses and so forth. I'm actually of the view that we don't know much about the present, actually, philosophically seen. We know next to nothing about the past. The history books are all written hundreds of years after the event. There are very few contemporary. And the contemporary, they have also very specific views about some events.
Yeah.
The Roman writers, they liked the emperors or they didn't like them, or they liked this family and didn't like that family. And about the future, we know next to nothing.
Yeah.
I mean, I admit, for me, I grew up in an environment and also on Wall Street where Kodak and Polaroid were among the, say, 20 most promising companies in the world. And we had an analyst at Y12, Brenda Laundrie Lee. She went later to Morgan Stanley. And she kept on telling us how many photographs the Chinese and the Indians and everybody would take in the world and how it would benefit Polaroid. Polaroid was founded by Dr. Land, and he had more patents than anyone else in the world. Photography changed. Everybody has a mobile phone and takes pictures, hundreds of pictures a day, puts it on the internet and so forth. And Kodak and Polaroid are essentially both bust. This is the reality of economic development.
Yeah.
And this is the beauty of capitalism. Leading companies are constantly challenged by new companies, entrants. Yeah. And this is very important in the capitalistic development, that you have destruction that allow new competitors to come in. By the way, he's not known in America, although he is by far intellectually the most brilliant economist that America has ever had. Capitalism, Socialism, and Democracy. Schumpeter. That is what people should read instead of the junk about Karl Marx nonsense.
We'll put that link in the description, Mark. That's wonderful.
This Karl Marx has no idea that he would be this destructive in the world.
No, he wouldn't. I got to ask you about Bitcoin. Have you ever spent 2 or 3 hours a week looking at it? Have you ever done a unbiased look at the digital currency of Bitcoin?
Yes. I mean, I'm very interested in digital currencies and so forth. But, it takes a long time to explain. But I hold physical gold, silver, and platinum for one reason. Some is in a deposit box and some is here in my home. Now, my home is very large, so I won't show you exactly where it is.
Please don't.
I get the visit of hundreds of Americans and viewers into my home looking for it. But the point is this. If in an emergency, let's say, the reason I hold gold is I don't believe in central banks. I don't trust them. And 2, for emergencies. Now, have you ever been in an emergency? I had the floods, so I know what happens. You have no telephone.
A few weeks ago.
You have no light, you have no water, nothing. But you need to get some food. So how do you get the food if nothing works? You can't use your credit card. You can't use anything electronic. You need hard cash. And hard cash are small gold coins, among others. I mean, a Van Gogh painting, I agree, is an unusual asset. And it has a great value because there are only like 50 Van Goghs in the world and so forth. But you and I, we travel to the jungle and you have a Van Gogh under your arm and I travel with a Rembrandt and we come to a tribe in the jungle and they look at this, they laugh about it. And they say, who on earth is so stupid to buy something like this. But you and I travel with 3 gold coins into the jungle. They bite it and say, oh, very good.
Yeah, we'll give you some food. You can stay with us for a few nights.
You can stay with our women.
That's wild, man. So Bitcoin doesn't interest you because of its electronic nature. It can be shut off in a crisis with no electricity.
In my opinion, it's like paper money. It's built on belief.
Yeah.
I'm a non-believer. I believe essentially that precious metals have a proven track record of having some value. Now, I'm not saying that the value doesn't fluctuate. It does fluctuate. But as a protection during times of upheaval, they have a proven track record.
Mm-hmm. Yeah, they definitely do. To your point, if enough people believe in something, it has, it becomes real, right? It has its function. It has its purpose. I mean,
yes, this is a philosophical view. If enough people believe in something, it is real. But in my book, the illusion can last a long time, but it doesn't become real. Or what is perceived to be right is not necessarily right under any condition. But as long as it's perceived to be right, it may become law.
This is what I mean. It becomes law. It becomes the standard. If enough people are doing it, it's like the U.S. I mean, the U.S. dollar is different in a way, but there's some coercion there. You're forced to pay taxes and things like that. You have to do it. So do you ultimately think that either another cryptocurrency will emerge, or that, this is almost like a tulip mania? Or do you think, Bitcoin will just kind of establish it?
We are globally in an incredible asset bubble. Now, some asset bubbles have deflated, like China and Hong Kong, but most of the world is still in a colossal asset bubble. Mm-hmm. In 1989, my view was that the Japanese market would collapse, because at that time, the Japanese market was 50% of the world's stock market capitalization. Mm-hmm. My view was it would collapse and bring down other markets, but that was wrong. I was wrong about this. The Japanese market went down and other markets went up. Mm. In 1980, after the oil price peaked out, oil stocks went down, brought down everything. Also, the NASDAQ in 2000 went down, brought down everything, but not for long. The basic stocks, gold shares and so forth, they bottomed out and went up. But I'm saying, I think in the world, the US could peak out, slide, go down for years and years. Maybe not in nominal terms, but in real terms, like the Dow in 1982 was below 800. It had been above 800 in 1964. So the market moved sideways, but in real terms, inflation adjusted, it was down 70%. So that is my view, that other markets will outperform the US, and other assets will outperform financial assets. I think it's likely that other assets will do much better than financial assets. That's my view.
So be diversified. That's really
be
widely diversified.
And enjoy life, because, it may become for asset holders. I mean, I look at the world from 2 angles. I'm an asset holder. And of course, I kind of feel happier when assets go up and so forth.
Yeah.
But I'm an economist at the same time and a social observer. And I can tell you, I sometimes feel bad about poor people because they have no hope. They get a higher salary, then the prices in the supermarket go up.
I know. They're right back to where they started.
They are where they started, right? Yeah. And that somehow depresses me. And so I need another beer.
Well, cheers, Mark. Hopefully one day we live in a world where that's not the case. And
it will always be the case. Wealth. Always. No society has achieved fairness.
What about the U.S. prior to 1971?
But I must say, the capitalistic system, when I look at society today, the poorest fellow in the world, he goes and can drink a Coca-Cola, and the richest dumb ass in America can also drink Coca-Cola. This was never before. The king in former times was eating food that was very different than poor people. He was living and having a toilet that was very different than poor people. Today, everybody has the same toilet. Everybody has access to running water, except the very poor. But I'm just saying, capitalism has created a class of people. That's why it's very important to read this, because it shows that capitalism is not about enriching the rich people, but about improving the standards of living of impoverished people.
Yeah, no, that's a great point. And even the downtrodden in the U.S. have it better than 100 years ago, 200 years ago. Marc, thank you for your time. I really appreciate it.
Yes,
Thanks for joining us.
I also wish your viewers a wonderful festive season. It's politically no longer correct to say Merry Christmas. Most of my friends are Christian, so I wish them Merry Christmas and a Happy New Year.
We wish you a Merry Christmas. All the best, Marc. Happy New Year. Thanks so much.
You.